Good Friday evening, ladies and gentlemen, all you traders out there and everyone following the S&P market. It is Friday evening, January 4th. I kind of wanted to just do an end of the week wrap video um, and talk about a few things. I wanted to talk about a little bit today my purpose with doing my videos. Obviously, they aren't professional, they're pretty amateur. But I wanted to kind of let you know where I was coming from and why these videos are being put out, and just tell everyone that does watch them I really appreciate the comments, and I appreciate you taking the time to take a look at them. I'm going to talk about my trades this week a little bit. Did I stick to my rules? How many trades did I take? What were my numbers? Also going to talk about my finish on December for my Collective 2 strategy, and the link is at the bottom of the description here, guys. You can take a look at every trade I make. Non-farm payroll happened today. Did it have an effect on the market? What's happened the last last 24 non-farm payrolls? I went back the last 2 years, 24 months worth, and I have some information and some observations about what happens on non-farm payroll Friday, and maybe it'll be helpful to you guys if you're actually interested in how it affects the daily market and whether you should trade it or not and how you trade it. I'm going to talk about my trade today after non-farm payroll. After I realized what the market was doing, I got 37 points out of the market today, and that kind of saved me and put me positive for the week. My total percentage gain, my total points for the week. Then we'll talk for a minute about where I think the market's going, and some comments I made on YouTube videos, both the bearish videos and the bullish videos. So that's kind of what I wanted to cover today. So anyway, I wanted to let everybody know the purpose of my videos here, what I'm thinking, why I've started putting these on. And I don't want to just ramble. I want these to be helpful, but I do tend to ramble a little bit. And but I also go off an outline every time I do a video because I want to get my point across. I obviously want to show you a little bit about my personal trading and the process I'm going through, my maturing process, and tracking my trades, Collective 2, putting it out there for everyone to see, and then doing these videos every week, even if I just do one at the end of each week. This really helps my trading psychology and really helps. It's just like journaling. It helps tremendously for me to continue to improve. So I'm glad I'm doing it, even though it's a little bit of work. I want to talk a little bit from time to time about trading psychology. And as I get a chance and kind of get more organized, I will definitely do videos just on trading psychology. I like to let everyone know the way I look at market structure. And as you watch these from week to week, you'll pick up little clues and hints. Really, guys, I'm not here to teach exact strategy. There are a lot of strategies out there that if you stick to them will be positive and you can make money with. But you will see my strategy and my perfect setup and my edge as I show you all the times I didn't follow it and the times that I did. And so you'll pick those clues up as you go along. And I'm not trying to be obfuscating or anything about it. It's just that once you find an edge, once you have an edge, it's most important to just trade that edge and don't stray. That's how professionals do it. Hopefully there'll be pieces of information you can continually use and continually pick up on as we go through this journey. And then if you have confidence in my trades, you see what I'm doing week to week, month to month, you look at my Collective 2 and you say, well, I think Barry's got this kind of down, still up, still down, but he's got positive return and his account's growing. Then you can mirror my trades on Collective 2 if you ever get to that point where you want to do that. So that's my purpose, basic purposes for doing these videos. And again, I appreciate you guys watching. I hope there's some useful information here, whether I just stumble into it or it's actually deliberate. My trades this week, did I stick to my rules? No, I didn't stick to my rules again. I did a little better this week. I did a few less trades, but this video is not titled I Did It. And you'll know I had the perfect week when you see a video entitled "I Did It." Until then, I'll keep working on the psychology and the discipline I need for that. So how many trades did I do? Actually, I had 21 income trades and 17 expense trades. I don't really care for win and loss words. That's casino language. You have two kinds of trades that you do in the market. You either have income trades or expense trades. If you look at the trades where you have drawdown, then just look at that as a business expense. And hopefully everyone you do have drawdown, you are logging it and learning and writing down what you did and didn't do correctly. So anyway, I had 21 income trades, 17 expense trades. Average income trade was 5.8 points. My average expense trade was 5.5 points. Normally, my income trades are 2 to 3 times larger than my expense trades, and I will explain to you why they weren't this week because of the market conditions and the fact that I was trading in conditions I should not have been trading in. My net points for the week was only 27 3/4 points for the whole week. So that was a lot of work and a lot of watching the market to come up with 27.75 points. But I had a 20% increase this week. Let's see, 20. I believe it was 20% increase this week. And I apologize. I wrote that down somewhere. Now I don't remember where I put it. So I know actually, I'm sorry, it's 10% increase. $2,000. Yeah, so it's about a 10% increase this week. So I wanted to let you know that that's kind of what I did. And then my C2 track record. You can go to Collective 2, and here's my track record for the week. December, I finished down 13.1%. So for September, October, November, December of last year, since I've been tracking my trades, I was up 88.9% for that 4 months, last quarter of the year, last third of the year. And then right now in January, at this point, since we just started the new week, I'm at 18.5%. So that's where I'm at. You can track all that, and that's my what's going on my Collective 2 strategy. And every trade I take is tracked on that website. So my December results were down, not too bad, but still I can do better, and I'm going to continue to do better. All right, so here's the daily chart, but we'll get back to that in a minute. Non-farm payroll today. I always like the fact that non-farm payroll comes out an hour before the day session opens, because then the volatility is kind of wrung out of the market that hour before after it is released, and so then I can get a lot better direction on what's going on. So non-farm payroll, here's my 15-minute chart right here, everyone, and non-farm payroll came out right in this area right here this morning. Sorry about the crummy circle. And so it was more right in here. Non-farm payroll was this little spike here. So it didn't have the volatility it typically does. The numbers were really good if you look at non-farm payroll, even though unemployment's up, just because more people are looking for work. But they added a lot more jobs than they thought they were going to. And of course, that's typically positive on the market. But anyway, so by the time that had worked itself out and started up, what I was looking for here, everyone, on this 15-minute chart, well, let me see the 1-hour chart here first. Okay, on this 1-hour chart, let me get rid of that. On this 1-hour chart, since the non-farm payroll was right in here, I was looking for this market, and I actually can't see it better on the 15-minute. I was looking for the market today, this morning, to show me some kind of impulsive wave that was going to get above, or was going to show me that this part of the correction was over. So on this 15-minute chart, this correction has been coming down. Excuse me. As I said the end of last week, this is more than likely an ABC, and I think that's exactly what's playing out. So this is an extended complex counter trend, the B wave, down, down, down. And the only way you know that a complex counter trend is over is if, in this case, it starts to take out one of the highs. And this was a lower high here. But then when it takes it out, you know that it's a good possibility that that trend's over, or that counter trend's over. And so I waited until the market got to the point where Sorry about that. I waited until the point where it started to show that it was pushing up through here, and at 6:44 a.m., 15 minutes after the day session opened, I went long right here and stayed in until about 15 minutes till the end of the day and got 37 points here today. So that wasn't too bad a trade, and that was from being patient, obviously. Now, one of the reasons why my my income and expense trades were about the same this week is because if you look at the week, this is the 1 hour chart. Here's the start, here's the break on the weekend, here's Sunday. And because this was in this B wave, again, what we have here is the A, the B, and I think we're heading up to C now. But because this was in the B wave, I get honing down on this short time frame, looking for these turns. When on the 1 hour chart, if it's doing this, and I know it's it's in the B wave because on the 4 hour chart, of course, it's working its way down through here. That is where I should just stay out and just wait until the market shows me some clarity. Again, if you look at the here's the 4 hour chart. Here was the break. Sunday, Monday, Tuesday, working its way down. I just needed to wait until I had clarity. I figured this was a B wave, didn't know where the bottom of the B wave was, in and out, and I just kind of, what do you call it, spinning wheels. I'm spinning my wheels here until finally today, when I am doing what I'm supposed to do, I confirm that this is pushing up above the last high and this B wave is actually over. So on the longer term chart, let's go back to 4 hour here. I believe it's heading, it did an A, a B, and it's heading up to C, I believe. And we'll talk about that in a second where I think that's going. So let me put that back down to my short-term trade, short-term chart here. Or actually, that's my 1 hour. We'll put him over here. And here's my 4 hour chart. So that's kind of what I did with my trade today with non-farm payroll. The effect it had, not huge, but it did spike up and down a little bit here before it took off. Interesting to note, you guys might be interested in this. I went back and looked at the last 24 months non-farm payrolls. And in the last 24 months, 16 of the 24, the daily price chart, price ended either at or near the bottom or top of that daily range. So it's kind of a good thing to remember, just like it did today. If you look at the daily chart, let's pull the daily up. Here's today's chart. Let me spread it out here a little bit. And like I say, so now we've got one more, this 100-point range today, and it closed within 10 points of the top. And so now 17 of the last 25 months non-farm payrolls have done either this kind of thing or the other way, bearish, where it closed near the bottom of the range. And so it's just good to know that typically that non-farm payroll is at least 66% of the time it has been, will tend to push that market one direction for the whole day. And it's if you're in a trade and you're going with the direction and you catch yourself in the direction of the trend because your system puts you there in the direction of the push for that non-farm payroll day, probably not a bad idea to just hang on to the last 10 or 15 minutes of the market, and you'll probably get about as good a return as you can get. So anyway, that's what I wanted to say about the last 24 non-farm payrolls. So my total points for the week again was 27.25. Where's the market going? Let me take a let's do something really crazy here and look at the monthly. And I can't go to a yearly, but I could tell on the yearly we've got a 1, 2, 3, 4, 5. So here's a complete trend on a yearly chart. Of course, the wave 5 on the monthly chart is its own 1, 2, 3, 4, 5. But what we're interested in here is not what the technical analysts are saying, what the perma bears are saying, or what the people that want the market to go up are saying. We want to know what is the market actually doing up here. So here's the low at 2009. But this looks like a pretty good ABC on the monthly chart. So we go down to the weekly to get more detail on it. And again, we've got an A, a B, and could be the bottom of the C here. Why I think this probably is the bottom of the C for now. Why I think we're heading back up towards the top. I know that's not popular. You listen to most of the technical analysts that know their stuff, that have had years of analyzing the markets. are saying that this is just a correction in a bull, and they're thinking it's heading farther down. And even though I'm kind of sticking my neck out here saying this could be the bottom, it doesn't matter on my trades. I have to see what the market's doing on all the time frames, and then I figure out my trades from there. But let's take a look at the daily here. And one thing I want to say about the daily and why I think this possibly it was actually the bottom of the correction. Let me grab this back up and put this on the end. So here's the top of the market back in, well, was it October, 1st of October. And we've come down to an A. We've done a kind of not distorted, but an elongated ABC and the B wave. And then we've got a 1, 2. Can't really see a 3, 4 too good there, but I think that's a 1, 2, 3, 4, 5 of a C wave. The reason why I think instead of this going here and then coming back down, a couple of reasons. One is typically if this is a wave, if this is actually the top of the B wave, and this is a wave 1, a wave 2, 3, 4, and 5, you look at both the length, shape, and magnitude of this wave 2, 188 points. If this is a wave 4, we've already gone 230 points. And notice the structure if that's a wave 2. Very subdued ABC in there. Look at what it's doing here. This is a not subdued, very pronounced 3 wave happening right here. So and even more importantly than that, let me spread this out. And here's the reason why I think we're at the bottom of the C and it's heading back up, guys. I'm going to take my little pen here and do this right here. Take a look at that candle. Well, that's an ugly circle. I'll get better at this. Take a look at this candle right here. Okay. What's the difference between that candle and these candles that started these other corrections here? Look at the intensity and the strength of that 1 day's candle when it came off the bottom. Now, the technical analysts you listen to will say a selling capitulation. They've got all kinds of titles for this, and if you looked at volume, you'd see that, yeah, that was a pretty strong volume. My point is this is such a strong turn that according to Elliott wave, this turn right here looks more like the bottom of the C wave than just a correction. Time will tell. It's not going to matter to our trading, honestly, because I look at all the time frames, but I just wanted to put that out there that it's very possible that we've seen the bottom of the C wave, and no matter what the perma bears are saying or the technical analysts are saying, this puppy, this isn't an ABC, this is a 1, 2, and it's heading up to wave 3, and it's working its way back up to the top. And if that's the case, it may take, let me see, 55 bars, 40, it may take 2-3 months for this to get back up in this area, but it's very possible that's what that's doing. So I wanted to just throw that out there. And I went on one YouTube video, one I really respect, and had, and because he had taken the position that it looks bearish and it's going back down, then of course all his commenters were agreeing with him, and I just took the opposite tact and said I hate to be the contrarian, but it's very possible that we just finished an ABC correction and it's heading back up. So time will tell. Whether I'm right or wrong is not critical. I don't base my trading on it, but those are some of the things I'm looking at. So, all right, guys, I appreciate everybody listening. I appreciate you coming along with me on this silly journey. And the markets are fascinating. I love it. And like I say, the first time you see a video saying I did it, you'll know that I followed my rules perfectly that week. Up until then, I'll just keep working on my trading psychology and getting better and better. So take care, everybody. Have a good weekend, and it'll be fun to see what next week brings.